Hey everyone, hope they're having a good day. My name's Andy, my channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together, generally related to three different topics: wealth building, commodities, and or financial topics. Let's dive right in, take a look, see what's going on today. If you want to follow me at Finance, and if you want to join our community, finding-value.com, where I dive deeper into all these topics, sectors, looking for investment opportunities and sharing those opportunities with everybody in the community. I do that through midweek updates and Q&A sessions on the weekend, answering your guys' questions during those weekend meetings. Special the coupon code if you want to join and try it out, see what I'm buying for this commodity bull market that we are in. Special gets you a $25 discount on the monthly membership for the first month only, and a $100 discount on the yearly membership, and you can always swap from a monthly to a yearly. Starting with Gary spitting some facts here. I like it. He says history provides compelling precedents for what happens when precious metals break through decades-long resistance levels. In the 1970s, silver's ascent from 4 to 50 represents a 1,250% gain that occurred in just 4 years. The result was the mining stocks of that era delivered even more spectacular returns, with some companies rising 2,000 to 5,000 plus percent, 20 bagger to 50 bagger, as investors recognized the leverage inherent in the sector. Today's setup is arguably more explosive because the starting valuations are lower, the supply deficit is more severe, and the monetary backdrop is more precarious than anything witnessed in the 1970s. Now, do I agree with it? I do. I do. I think he's 100% accurate. Now, does that mean that I put all my money in precious metals only? No, it does not. Why? Because whenever you go long in one sector and you put 100% of your net worth in one sector, I will tell you it is very, very scary. The pullbacks, the whiplash, the ups and downs, the volatilities. That means that when gold's going up, it's a party. When gold's going down, it's a crisis. So I like smoothing out the portfolio, going across 12, 13, 14, 15 different ideas or more, and it really smooths it out. Now, it doesn't mean that I will outperform. What it does, I keep my sanity from massive volatility and worrying if we have peaked or not. It allows me to ride through and weather whatever is thrown at me by the markets. Now, I also think that there's other sectors that can perform just as good. You know, the 20 to 50 bagger that he was talking about, there's other sectors that can do that as well. And then I can get in those sectors as well and smooth the portfolio, smooth the ride moving on up. It keeps me sane and keeps me in the game. And that's what's important, staying in the game when a bull market is present. That is everything. We got momentum structural analysis, which is Michael Oliver. He says, now that more mainstream Wall Street types are noticing the move in gold, it scares us early investors, understandably. But it's not the top. All markets have a point where the normies finally take notice, and that's usually the middle second phase, not the final topping phase. Retail still doesn't seem to care. Just some Wall Street money managers who typically only care about stocks and bonds. And there's kind of a bellwether of where we're at in this market. And I would say that's probably an accurate statement. We're probably in the middle second phase. Yeah, I could agree with that. Totally agree. So I think, Michael Oliver, I think he's got a pretty good view on it. I also think that Gary Baum up there, I think he's got a pretty good outlook, pretty solid foundational opinions on all of these markets. And I think they're accurately gauging where we're at in the market, which is good, which is very, very good. Rob says, soon fractional gold and silver will be the only metal most Americans can afford to buy. Prove me wrong. I can't prove you wrong, man. I agree with it. That's why I'm sharing it. We are going to go into a very big bull market in commodities and precious metals. And life will look different, feel different. It won't be the same. And I think people already feel that. I think before 2020, things were cruising. It was easy street. You could go get some loans, go buy a house. Housing was incredibly cheap in the 2010s. Everything was easy. Everything was cheap. House prices were cheap and we had cheap mortgage rates. But I think that's done. I think it's done. I think the cheap interest rates are done. I think cheap housing might be done for a long time. Things are going up massively. Go to the store. I can tell you it's like getting kicked in the nuts every time you try to put that credit card in to pay for some items. It's like, what happened? I could remember when $100 used to actually be a lot. If I saw $100 bill that my dad would pull out of the wallet, I'm like, damn, that's $100 bill. Holy crap. Now every time I go to the grocery store, I need multiple $100 bills to get out of the checking, the checking to get out of there, to get out of the store with the food that I want. It's 200 and something bucks, 300 bucks. It's like, my Lord, $100 bills are just flying out of the bank account. So I don't know. Ever since 2020, I feel like the world has changed. I feel like every time I go and buy something, it's like getting kicked in the nuts compared to what it was in the 2010s. 2010s, it was like, insurance, that's nothing. But now insurance is like it's like a more it's larger than my mortgage payments now. It's like, my Lord. Car insurance, home insurance, going to the store and buying food. I mean, this is ridiculous. So yes, I do think this is going to be the case, and yes, I think gold and silver are going to account for all this inflation, and I think it's going to get way up there. I also think that things are going to get much worse in terms of affordability. I think oil's going to rip. I think copper's going to rip. Iron ore, everything's going to rip. Please stop measuring crude in gold terms. Come on, are you kidding me? Rory, what you gotta get into the game of chess. Stop playing checkers, buddy. Stop playing checkers. Get into the game of chess. Everything in life, everything, everything is all measured based off of relativity. You go to the store. What do you do when you compare products on a store shelf? What you do is you get in the same unit of measure. The same unit of measure. The same unit of measure if you're buying green beans and you've got two different sizes of cans, you measure it per ounce or per pound, per something. That is the same unit of measure. Now, a currency, this is the problem with measuring in currencies. They don't keep their value. They are not a solid unit of measure. So when you go to measure it in a currency, you don't even know if the product went up or down because you're measuring it in the currency. So if your currency declines by 10% and the product that you're buying increased by 5%, did the product go up or down? And you're going to say, well, I don't know. I mean, you make a compelling argument. If the currency is going down at, say, 10% and the product went up 5%, well, then I guess the product got cheaper in terms of currency on a relative purchasing power basis. And I would say, yes, it did. But the price went up. Well, what did it do in something that's a solid unit of measure, like 1 ounce of gold? 1 ounce of gold removes the crappy currency denominator. And then you can see with perfect clarity an asset versus an asset over time when removing the currency and the relative valuation against each other. And that's all that matters when you're investing. It doesn't matter if you make paper currency. It doesn't matter if that goes up, if the purchasing power is going down faster than the currency, than the asset that you're buying is going up. I mean, go look at the S&P 500 measured in gold. You know what? We can do that. Here's the S&P measured in gold. That's the S&P measured in gold. And we can get it here. And all that matters is that you're in the S&P when it goes up, and you're in gold when it goes down. That's the cycle. The cycle started in 2000, 2001. This here is a relief rally. You see it a lot in a lot of the fractals where they get these relief rallies, like you get a big move lower, you get a relief rally, this is a relief rally, and then it's going to come all the way back down again. And then it will bottom, and then we'll put in some like bottoming pattern, like this is a bottom here, this is a bottom here, it's a shoulder, head, shoulder, and then we have to put in the bottom whenever it occurs. I can't tell you when that's going to occur, but we're going to put in a bottom over here somewhere. And that's the cycle. It's as simple as that. And then you can see the Federal Reserve here went into power, and they're creating this gigantic, volatility of boom bust cycles. So that's what it is. So please stop measuring crude in gold terms. Then tell me how to measure it. I can't measure it in currency terms because currencies are garbage. It's not a solid unit of measure. So here's deep value signals, copper, cup and handle, and another cup. The triple espresso setup of the century. We tagged $5. Next stop is $17 to $18 a pound on the measured move. And long term, much higher. This will be priced where silver was just a few months ago, right before everyone woke up to it. We're already positioned in what I think is a great copper company. Now, someone might say, well, how come you don't have a whole bunch? Because I think copper, those companies, they'll still make more money, but they are not well set up. They are fighting declining reserves. They're fighting declining ore grades. They are fighting everything. And there are very few companies out in the world that can grow production and have really good ore grades. I mean, you can fit them all in one hand. And one of them is a standout, exceptional opportunity. And this is about to break out. It's about to break out. And you're going to sit here standing in front of this cup and handle of copper. And even if it's not a cup and handle, it doesn't really matter. It's at resistance. It's about to break resistance and run tremendously. You know what you do if you want to invest in stuff like this? You get in, you sit, you wait, and you do nothing. The opportunity's there. You just have to get in it and sit in it. And then let the monster pattern change your life. We have these patterns. You think that monster pattern in copper is by happenstance? It's the same setup as gold. When it broke its cup and handle pattern, I'll show you the cup and handle pattern in gold. Gold just does it first, and then everything else follows. That's as simple as it is. So I've got this. This is the cup and handle that I'm talking about there. There's the cup and the handle, right? There it is. Silver has a very something, very similar, but it started from back here. It's just this is the big cup and handle there for silver. Copper's got its own cup and handle, and it's on this time frame here. It's on that one. And it's right here. And notice the pattern it's making. You see this fractal pattern? I'll grab it here for you. So you guys can see it. Oops, it's under this one. The fractal pattern that I am talking about is that little fractal right there. Do you see that pattern there? That thing? I'm going to copy it, and I'm going to go bring it over to copper, right? Tell me if you see something similar. It doesn't have to be the same, it just has to be similar. All right? So I'm going to do this. And then tell me if you see something that is similar. You guys see that pattern? It's the same damn thing. And then we're going to break out and rip. But that's the fractal. There's another fractal here that is the same pattern here too. This fractal here is the same thing. that's the edge here, the pull down there, and then you've got that fractal in the beginning and in the middle there. It's the same thing, and it just goes over and over. This is the breakout of 2020, and then we create another fractal pattern here, and then we're going to break out of that to the upside. And then the 3-hump consolidation is 1 hump, 2 hump, 3 hump, and that's the same fractal there too. And then the big move. So one of these big moves, like this, coming up over here when we break that resistance level. And this area is probably this area right here, right at the peak. You see that peak? So this fractal, let's just get fractal with it. All right? I'm stating is about to occur. Something on the lines that this here, I'm going to blow it up. You guys see the fractal nature, 3-hump consolidation, the breakout. Now this one's been a little bit longer in its consolidation here. But this consolidation is this consolidation here. And it's right at the highs. So right at the highs, we're consolidating right there in that same fractal formation. And then what comes next is a vertical move, And this is going to happen in copper. It's also going to happen in oil, delayed a little bit. It's going to happen in uranium. It's going to happen in a whole bunch of different asset classes. You know, we can look at, here's zinc, just to show you zinc and what that looks like. Zinc is starting to move higher too. And then look for fractals. Now this here, it's a little bit different setup. I think this is wave 1. Wave 2 is here. And then we're going to go into 3 as this breaks out. If I can draw it correctly. And then it's just over and over and over and over again. All these big breakouts. And some of these, you know, they create wedges and stuff like that as they trade. Palladium was next, plus 40% so far. Look at this thing. See the squeeze here where the volatility drops? Volatility squeezed in platinum, and then palladium also squeezed up. Now we're ripping higher in both of them. It looks like a bull market to me. Here's another rare bullish signal for oil. When measured in gold terms, and Rory thinks that we shouldn't be doing this, but I definitely think we should be doing this. The relative strength indicator, 14, smoothed by a 6-month average, has reached extreme levels. Historically, when this metric rose above the 69 threshold, oil's average 1-year performance was plus 57%, with gains occurring 88% of the time. The 2-year average performance was plus 96%, also positive 88% of the time. So let me get this straight, guys. When we get a gold to WTI ratio that is this cheap, compare it to history, we get a 1-year performance of an average of 57%. We get a 2-year performance of basically a doubling of oil price. And the probability of this occurred 88% of the time. Do you guys see something here? I mean, does that make sense? I have a 90% success rate with oil doubling it basically for the average performance, doubling the next 2 years. This is no brainer. Now, let me describe why this occurs. Do you know why this occurs? Because oil does not do well under a certain market condition. It doesn't do well under a disinflationary market condition. You know what does really well in a disinflationary market condition? Gold does. And what happens is this swings back and forth. It goes from the buy zone of oil to basically the buy zone of gold. And it swings back and forth in a cycle. Some of the cycles go all the way up and get blown out of proportion. Other cycles, not as big. We are in a cycle right now that is blown out of proportion for the ratio of oil being on the cheap end and gold being more expensive. Now, to really break this through, what you want to do is you want to start to compare these assets against other assets. Would you say gold is expensive against everything and oil is more fairly valued? Or is gold also cheap against other assets and oil is just ridiculous? I'm in the latter there. I think oil is ridiculously cheap and I think gold is also cheap against other asset classes. So when we price it against the S&P 500, gold versus SPX, we see that gold is cheap in relationship to the SPX. Because if this were the average here, if the average was something like this right here, we are really, really cheap. We're on the cheap end where gold is cheap to the S&P 500. And then what that is doing is it's basically saying that oil is ridiculously cheap against the S&P 500. And that's exactly what we see. I would go as far to say that oil is probably the best setup in the market today. There's a few others too. One of the best setups in the market today, bar none, period, from a ratio perspective against all other asset classes. We are cheap against the S&P 500, squeezed up into a corner of guys. I don't know how. I don't even know how to like describe this setup. We are squeezing into this corner here. Whenever you squeeze into a falling wedge like this, it's a falling wedge because the bottom is falling down. We've got lower lows, and then the top is also falling down. Whenever you get into these big squeezes, they generally release a bunch of pressure at the end. They break out big. This could be one of the largest breakouts we've ever seen in the history of mankind. Like this is going to be an absolute booming move. Now, I also think that's going to occur in something like XAG, which is silver divided by the SPX. We're also going to get a booming move here. See how all of these are in falling wedges and they've been squeezing since the early 1900s, basically when the Federal Reserve was created. We're squeezing into these corners, and I think that we are going to get these gigantic moves. And let's do platinum. I don't think I've done platinum. We can do. I don't think I have a long term. I don't have a long term chart of platinum. Uh, well, TradingView doesn't have a long term chart, but these do. I think that they're all set up at ridiculous prices down here. They've got that double bottom. This is a double bottom here. It's breaking out. We'll have a little bit of resistance going across here as we break out. And then we're going to move. This is going to take probably multi-years. You know, it's not going to be measured in months or weeks. And these things are just going to, I mean, they're going to unload. You're going to see stuff in the accounts that it's just going to blow your mind. You're going to be like, oh my God, this is ridiculous. I can't believe this is occurring. I'm already at that stage with this most recent move since April of 2025, but like, it's just going to keep going and going and going. And we haven't even moved off the bottom yet. Haven't even moved off the bottom yet. This is going to be ridiculous. Here's steel. I like steel quite a bit, guys. I really do. I love these sectors here. They're very, very nice. Steel SLX, another breakout. Do you think we're going into a depression if steel's breaking out? I mean, in all honesty, guys, is a recession coming? Why is steel breaking out? What I see is I see inflation. I see inflation sensitive assets getting ready here. They're prime at their bottoms. Oil's bottoming. We're breaking out on steel. Like these things are getting ready here. Something big is coming. Something's brewing. Here's aluminum. Aluminum. Really? That's a recession? Recession's coming with aluminum breaking out? I don't know, guys. I think we've got serious currency debasement issues coming. And this is what they're all breaking out because of that. Aluminum. Aluminum looks really good. We positioned over here in this. We caught the bottom of so many good companies on the website. And you know what I'm going to tell everybody who's listening that's part of the website? It's all about holding on. About learning how to be okay and just holding on. Because when these things start to really move, um, your 2, 3, 4, 500% increases that you have in your stocks. I know everyone's excited. I understand that you're excited. You got a 5-bagger or maybe the 10-bagger we recently got on the uranium stock that a lot of us hold. You're excited. You want to take profits, but I'm just saying I think this is ready to go. Like I think we're going to go big, big. It's looking very good, and we already went over that. So I'm going to end it there. So that's what I've got for today. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. Special with the coupon code if you guys would like to join. A lot of opportunities out there. I think we've bottomed in a lot of stuff. We're seeing lithium absolutely rip. We're seeing rare earth metals rip. We're seeing steels starting to come up. We're seeing copper setting up here. Oil is setting up, and energy service companies are setting up. They've already bottomed. They're starting to set up and come on up. Coal companies, we ripped that one. We ripped the coal market in half there. So if you guys are interested in learning the companies that I like, you can see that we've had a lot of good success this year. I hope the success continues for everybody involved, including myself, because I'm in all the stuff that you guys are in. We have some good setups still that are out there. They are becoming less with time as they come into favor, money starts flowing into the sector, and then they just blow up. I mean, it's hard for me to buy something that's up, 100, 200% off the bottom when I saw it and I could have purchased it at its bottom. But things are moving and things look good, and I hope they continue for everybody. All right, guys, that's all I've got. So we'll catch you next time, guys. Oh, and 5 p.m. Mountain Time Sunday question and answer session this weekend. All right, guys, see ya.